Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. We're not just talking about growth stocks, we're talking about aggressive growth stocks with Bill Wilton, our aggressive growth stock strategist at Zacks.com. I had to make that distinction there because these are just not run-of-the-mill growth stocks.
Absolutely, I appreciate it.
These are on the fast track here, let me tell you. Buffalo Wild Wings being one of them. BWLD, the ticker symbol. I think everybody knows what they do. They specialize in chicken wings.
Yeah, they're a popular sports bar here in America. They've got almost 700 locations right now. Their last quarterly report came toward the end of July, and they showed revenues were actually rising over 12%, which the restaurants have been struggling lately, so that was always good to see. The one main concern here, though, is that it did come on, they've been expanding their locations. Their comp store sales were actually down a very small fraction of a percent. But they are still willing to be aggressive and start growing their footprint. That's my one concern with them that I wanted to get out of the way. But
expanding too quick?
No, that the comp store sales were down a little bit. I do like that they're expanding because that shows that they are that confident in their business model right now that moving forward things are getting better. And at the end of the day, their net income is rising. Last quarter it was up 31%. They topped the Zacks consensus estimate by about 8 cents. For that period. Additionally, they're still a Zacks number one, and because they are growing at such a good rate, their PEG ratio is coming in at 0.9, which shows that they are growing, but it is still a good value as well. Now they're expecting 22% and 18% growth over the rest of this year and 2011. When I say they, I mean the analysts after those upward estimate revisions.
Okay.
Previously, this was a couple quarters ago, some analysts, were a bit concerned with their quarterly report because the restaurant had been expecting 20% net income growth for this year. Back in April, there was some concern that they weren't going to hit that. The shares sold off sharply, as you can see here, but in the recent quarterly report, they said they're on track to hit that target. So that's why I think this is a pretty good buying opportunity right here. The last time they expected them to grow at about 22%. You can see where shares were trading, so there's definitely a lot of upside potential there.
All right. And then you have written about Rudolph Technologies recently, RTEC, the ticker symbol. What do? They make tools for semiconductor makers, right?
Yeah, there's specialized tools, that go into the semiconductor making process that allows these manufacturers to, detect imperfections and manage, their day-to-day manufacturing processes. On August 2nd, they more than doubled the earnings estimates in their quarterly report. 23 cents is what they ended up earning compared to just 11 cents that analysts were expecting. Their sequential increase in revenue was about 19%, which is good. What they're looking at is about that same amount moving forward. They're looking for about 10% in the following quarter that should be coming up in a couple months. They're also trading at a very deep discount here. Shares are at 11 times forward earnings, and that PEG ratio is just 0.4, which means that growth is, it's almost dangerously cheap, which is one thing that can send up some red flags, but everything else in their business seems good. So I'm looking at this as more of a deep discount rather than, a troubled stock here.
They're expanding through acquisition too, right? Yeah,
they just brought on, some assets from another, more of a consulting type of company. And, the big thing is some intellectual property and about 35 more employees, which is a decent increase for a company like that. It's probably not going to materially impact the bottom line anytime soon, but it does show that they're willing to keep their day-to-day business, operating at peak efficiency and that they are able to take on some M&A activity, no matter how small it is.
Right.
Here you can see the 5-year consensus estimate trend. It's kind of a story of our economy. Things were heading downward into the recession, but they've actually bounced back very sharply, almost like that V-shaped recovery that everyone thought we were going to see. They're kind of living it. And the last time that estimates were here, similar to Buffalo Wild Wings, we saw shares much higher than that. So also seeing a pretty good value here with a lot of upside potential in this company.
All right, do you own either of these two?
I do not.
Check out more Zacks Rank By stock pick ideas for yourself at our homepage, Zacks.com, if you're not there already. We put 4 new picks up there for you daily, 1 in each of the investing categories written about on Zacks.com, Bill's category included. With Bill Wilton, I'm Terry Ruffalo.